Hey, are you ETSing, PCSing, retiring? Are you planning to use your hard-earned VA for the first, second, maybe third time? Regardless if you're a VA loan veteran or a newbie, it's important to understand how your VA loans work. This government-backed mortgage has way more flexibility, and it has way more forgiving requirements than other loans. Things like 0% down payment and no mortgage insurance requirements can really set this loan apart from the rest. Understanding some of the basics about the VA loan process and what lenders are looking for can make a really big difference to home buyers. Here are some things that you should remember. Starting without a COE. Don't let a lack of paperwork or authorization stop you from busting down the door. Where have we heard that before? You do not need a certificate of eligibility or COE to start the VA home loan process. Knowing your credit report. Your credit score will always be front and center when it comes to applying for home loan. You don't need a perfect credit score, but it does need to be decent. And the higher the credit score, the better the rate. Knowing the acceptable uses. The VA wants veterans to use this program to either purchase or refinance their primary residence. It can be used for new construction homes and multi-unit property, so long as you actually live in one of those properties. This program cannot be used to buy an income-producing property. Even though a multi-unit property is technically an income-producing property, that's your way in. But it is possible to turn your primary residence into a rental property further down the line. Understanding occupancy requirement. One of the requirements is that you are expected to be living in the home as your primary 60 days after close. Now, this could obviously be a problem for deployed personnel, but luckily there are exceptions, such as a spouse being able to meet that requirement. But if you're a single soldier, just make sure that you talk to your loan officer as soon as possible. Reliable income is key. Lenders always want to see reliable and steady income. You'll need to have an acceptable ratio of debt to income and also meet requirements for residual income, which all just basically means what you have left in the bank after you pay all your bills. They usually want your debt to income at or below 41%, but it is possible to go higher and still be eligible for the loan. Guidelines vary by location and also family size. 2 years on the job is the gold standard. It doesn't make or break you, but again, lenders want to see steady and reliable income. Loan pre-approval is a must. Now, I have already made a video regarding pre-approval letters, so I won't spend too much time on that. Just know that as a home buyer, getting a pre-approval letter is probably one of the most important things you can do when buying a home. Getting a VA Smart Realtor. Getting a VA home loan is not an everyday thing for loan officers and all mortgage brokers. It is a specialized program with unique rules and guidelines. A real estate agent that knows his stuff regarding the VA can really help you alleviate headaches down the road. They can help steer you away from properties that could pose significant problems for the VA approval process. Keep your credit clean. Now again, I have another video on this, but this one I will reiterate. Finance anything, don't buy anything, don't go on any trips, just keep your money in the bank. Lenders do not like seeing you spend all this money. It could ruin your chances of approval with any type of loan, and the VA is no different. And that is the down and dirty regarding VA loans.